Hello, everyone. This is Justin Smythe from nextbigtrade.com. In the final section this week, I want to discuss a new feature of the newsletter that I plan on putting out from here going forward, and that's looking at buying pullbacks in recent stage two breakouts, uh, which is essentially point B on the stage two investor breakout and the stage two continuation breakout. And those charts I've included in the newsletter, and they're in Stan Weinstein's book. Definitely read that book, by the way, if you haven't read it. But the way these stage two breakouts behave tends to be different, and it's really kind of unpredictable in a lot of cases. What they're going to do after their initial breakout. But what happens is some of these stocks tend to really just continue higher immediately after their breakout, and other stocks will have a pullback, um, and then they'll continue higher after the pullback. And the first pullback is really a great buy point because you're buying back towards the breakout area. Your risk reward ratio is better, buying on a pullback, and your timing is a little bit better because you don't have to wait for the consolidation after the breakout because you've already waited. The stock has already consolidated and now it's ready to continue moving higher. So what I discussed in the newsletter is what you want to do is, after you see a breakout and it's a little bit extended, just put it on the back burner, or, whatever else you want to call it, and just wait for a week or two, or even a little bit longer for the stock to continue higher. So that's what I do often when I'm looking at the breakouts to potentially trade is if a stock's a little bit extended after the initial move higher, I'll just wait a little while longer and see if I can get a better entry point. So that's really what the idea is here, and that's what I want to present in the newsletter. So we're going to talk about some recent stage two breakouts that have now already had a pullback and that are in position to continue higher. Starting off with CRUS, this is a semiconductor stock. Obviously, this sector is red hot, and this stock now has pulled back for 3 weeks after its original breakout, after earnings back in February. So now we're talking about a potential for this stock to immediately kind of resume higher here after a nice tight consolidation around the top of the breakout range. You can see the volume is starting to increase here. So this stock could be, at an imminent breakout point. And then jumping down to the daily chart, you can see this consolidation. You've got the breakout here, gapping up on volume. Basically, what it's done is respected the gap for multiple weeks now and is right at the top of the range, ready to break out. So this stock is in a good position. And what you've done here is, if you didn't trade this stock after the breakout, you waited 3 weeks. Now it's in better position to follow through, and volume starting to come in here as well. LYFT, same type of thing. You've got massive volume on the breakout, but it didn't initially follow through higher. It's consolidated for 2 weeks. And if we drop down to the daily, it's starting to consolidate nicely against that 20-day moving average. You've got tighter price action here, and if we see any type of an increase in volume this week, that might be a good trigger for a breakout. PLTR, now this one I think is having trouble continuing higher because of its market capitalization. It's a pretty large stock, and after it initially made this move higher, it has simply consolidated sideways. And if you drop down to the daily, this one I think still might need a little bit more time potentially to catch back up to that 20-day moving average. But overall, we're still in range here. You can see how volume has declined nicely, but it still might need a little bit more time potentially before it breaks out again. PTEN, this is an oil and gas stock again. And as I discussed in the newsletter too, some of these breakouts that have overhead resistance, like this stock, sometimes they need more time to kind of consolidate to fight through that overhead resistance. And what's happening is there's sellers that are coming in as soon as this stock makes a move higher. They need to be cleared out before the stock can then continue higher after the initial breakout. So this one's consolidated sideways for 2 weeks after its breakout. Volume kind of came in above average last week. On the daily chart, it looks even better. Nice consolidation here after the breakout. Volume declining. This one could be set up to continue higher, especially if crude oil continues to break out. Gold stock SA, this one broke out a couple weeks ago again on heavy volume, consolidate sideways in a nice tight range. And with gold breaking out, this one's in great position to follow through higher this week. And finally, airline stock ULCC, again, another one that's got overhead resistance. This one broke out on big volume a couple weeks ago, still consolidating sideways. Volume was nicely declining on the pullback. On the daily chart, you can see that we're retesting that 20-day moving average. So this is a great risk reward area. This stock could continue higher here, especially if we see a increase in volume coming in after a nice contraction on light volume on this pullback. So overall, we're looking at kind of a new ongoing segment in the newsletter, looking at these pullback buy opportunities after stage 2 breakout. I think this will give better risk reward buy points for these recent stage 2 breakouts. And this is a good lesson in patience too. A lot of times, you see a stock break out, it's a good, that means it's a good time to buy the stock. But if you want to get a good buy point and not have to wait for the uptrend to resume, what you really need to do is wait a little bit for that initial pullback to buy into, and then watch the stock resume higher after that. So patience tends to be rewarded in the stock market, and that's really what's going on here with these pullback buys.